Bhagyesh. He is Director for Climate Investments APAC at South Pole. So Bhagyesh, thanks for joining me this morning.
Thanks, Amy.
And we're just gonna, we're gonna talk about, climate issues, climate solutions, and the role of the mining industry. So I guess, Bhagyesh, do you want to just kick us off, just giving us a bit of a background into yourself and your professional background and what brought you to South Pole?
Sure. Thanks, Amy. Look, I must confess, I actually come from the mining sector. So I spent 30 years living and working in places like Indonesia as an investment banker, corporate advisor, and investor in the mining space. A few months ago, I joined South Pole, which, having joined them, I've started to appreciate what a big company South Pole is. We consider ourselves to be the largest climate action company in the world. What we do, South Pole, is we have three business verticals. We provide climate solutions, which is helping companies measure their carbon footprint, work out their net zero roadmaps, and help them come up with strategies to achieve their net zero. We also develop carbon projects, which are projects, nature-based solution projects focusing on forestry, conservation of forests, restoration of forests, regen agri, and generate carbon credits that we then trade. And we also supply to the clients in the first bucket, because what we find is that clients can achieve, in order to achieve the net zero targets, they need to go beyond, and they need carbon credits as well. And the third business line, which I'm part of, is climate investments, where we have our own carbon funds investing in nature-based assets and generating carbon credit and financial returns for our investors. So this is some of the impact. South Pole was set up 17 years ago. Our largest shareholder is Temasek, actually, through Gen Zero. Salesforce and Lightrock, the impact fund of LGT Bank, are other shareholders. And we've had a significant impact over 17 years in terms of restoration of forests, conservation of land, provision of renewable energy, clean water, creation of jobs, and developed over 1,000 plus climate projects. Some of the companies that we work with various government institutions, given the space we operate in. And there you see some of our clients, the Coca-Colas, Starwoods, L'Oreals of the world. We've got offices, 30 offices, and located in 50 locations, present on all 5 continents, 1,300 plus people, very strong in LATAM, Africa, Southeast Asia. Just opened an office in Tokyo in partnership with Mitsubishi.
Yeah, so we're going to be looking at some of the the solutions that Bhagyesh wants to, is able to share with the industry. And but first of all, what is the impact overall of mining on climate?
I think I put some slides and numbers together, but it's obvious to everyone that mining has a big carbon footprint. We're not here to try and sort of talk about that or beat up the industry on that. We also know that mining has a very important role to play. And without the materials that it produces, I think the previous panel talked about lithium, copper, nickel, we can't achieve a net zero world. So really, mining has a very crucial role to play in 2 ways. One is decarbonizing itself, but also continuing to produce the materials that are needed, but doing so in a sustainable and responsible way. So that's really the goal here. And just like any industry, the mining sector can do a lot more. We talk here about scope 1 and 2 emissions. And scope 1 and 2 emissions, for those that are not so familiar with climate acronyms, is basically emissions that a company is responsible for and has control over. So its own operations and the use of power. But the biggest emissions actually come from scope 3, which is in your supply chain and the emissions from your customers. And this is where the mining industry, a large part of the carbon footprint of mining companies comes from scope 3 emissions. And very few companies have set up targets to reduce that. Now, to give you an example of what I'm talking about, Apple recently announced that they're purchasing carbon-free aluminum for their products. Now, that is a proactive step in trying to reduce their scope 3 emissions. And this is where not just mining, but all industries can do a lot more, because once we start to force our suppliers and customers to look at climate as well, that's when we can start making a real impact and difference in the battle against climate change, Amy.
Yeah, absolutely. So, I mean, um, it'll be interesting to kind of get into some of these solutions and the ways to kind of address
Sure.
those later. But yeah, I mean, you've got an interesting slide here about kind of the threats of climate change actually on the industry. So do you want to talk a little
Sure.
bit more about that?
So I think there are two reasons why the mining sector. There are three reasons really why mining should be looking at climate. One is of course, the fact that they produce materials that are important for transitioning to a net zero world. Two is the fact that there is a large carbon footprint created by the mining industry through its operations, and third is actually climate has a big impact on mining as well, and it's a big threat to mining. And I've tried to set out some of the challenges and threats that the mining sector faces. With global rising sea levels, rising temperature, there are physical challenges to mining. Port availability, supply routes are going to change. A lot of mining operations, especially for copper in particular, are in countries such as Chile and parts of Australia, which are in high water stress regions. So, if we start to deal with water issues, that's going to have a big impact on operations. The melting ice caps, that has a big impact as well. So there are many physical challenges. The infrastructure and operations are going to be challenged, and the stability of these operations will be affected. Employee and health safety comes into question because, again, with rising temperatures, it leads to sickness, diseases, all kinds of stuff. The third one is that as we move away from fossil fuels, a lot of companies have to divert to the green metals. Now, BHP accounts for, I think, some of these big companies, a large part of their revenue and profits comes from fossil fuels. So they have to switch to lithium. Rio Tinto has made a big acquisition in lithium. BHP is switching to nickel and copper. So you have many examples of that, how big companies have to start, strategically shifting their operations. Social license to operate is a big one because as we operate in countries such as Indonesia, Chile, Australia, and where mining companies come up in conflict with communities competing for resources like water, that's going to be a big issue because who's going to win that battle? And the governments are going to make it very hard for mining companies to get the licenses. Project financing is going to be difficult because all of this, I think a question from the gentleman over there about why it takes so long to get copper mines, etc., into production. I literally got an email yesterday from a gold operator in Ghana. They're putting together an operation in Ghana, and they would like us to come in and help them design the mine in such a way that it is climate friendly and protects the ecosystem. Now, that's going to be additional cost, additional time. So that's a factor that is not going to go away, right? But all of this means that project financing that the panel talked about is also going to get more complicated and difficult. And finally, an interesting comment, I think, is that, as we saw with Apple securing aluminum that is carbon free. Now, this has not been factored in yet, but metals are not priced yet on their carbon footprint. But there may come a time when buyers of metal are going to say, look, we need to know, they're already talking about blood diamonds, that concepts exist, but they're also going to start asking that, making sure that your operations are done in an environmentally sustainable way. So they want to secure carbon free or carbon neutral metals, and that may be priced into metals as well. So these are some of the threats that the mining sector faces.
And so, there's definitely a lot of threats. What are the opportunities?
Sure.
So, what can the mining sector really do to, have a positive role in this?
Sure. So I think one obvious one is what we're seeing is the likes of Rio Tinto switching to lithium, BHP moving across to copper, nickel, more green metals. Another way is obviously looking at their own operations and seeing how to decarbonize their operations, electrifying the mining fleet, switching to renewable energy, looking at their entire mining operations and seeing how to optimize it, reducing waste, recycling waste. We've seen an example of Goldfields, putting together a tire recycling facility in their operation in Ghana. So that's a good example of how what they're trying to do is recycle waste. Neom City is looking at it's being built in an area which has got no clean fresh water. So it's basically built a desalination plant. It's also using the byproduct brine to extract materials. So there are many ways in which the mining sector can actually look at how to sort of decarbonize itself. And the other one, an area which of course we focus on, is how they can actively invest in nature-based assets. Having moved from the mining to the climate space, I actually realized there are obvious differences, but they are two different sides of the same mirror because they operate in the same areas. You've got a large copper asset sitting right next to a very large rainforest and a big thriving ecosystem. So mining companies, and you need the support of the community, and you need support of the government. So in many ways, mining companies are very adept and attuned to dealing with nature-based assets as well. And they have a responsibility of doing that. To give you an example, I'm not sure if it's on this slide, but look, Rio Tinto is developing 8 nature-based projects. Rio Tinto has about 4 million hectares of land globally. They're converting 500,000 hectares, which is just half the size of Qatar, and using it to conserve and restore forests. Now, this is a very good example of how a mining company has access to this land, has access to these projects. So it's in a very good position to actually give back to the climate, give back. And what is proven in our industry, in the climate industry, is that protecting existing forests is the cheapest and most effective way of sequestering carbon. If you take degraded land, if you take a mining area in the middle of Indonesia or Sumatra or Kalimantan and you start to plant trees, we must remember that trees take 15, 20 years to grow before they can actually start capturing the volumes of carbon that are needed. If you have existing trees, that's going to be far more effective. There are many companies investing, and indeed tech companies investing in carbon sequestration technologies. That costs $1 to $1.5 billion. Um, and the cost of those carbon credits are $500 to $1,000. If you just simply focus on nature-based solutions, the cost is roughly $20 a ton. And you're talking about 20, $30 million a project. So very, very effective sequestration of carbon and very cost effective as well if you simply conserve existing forest areas. And this is where mining companies can play a big role. Anglo American is also tied up with a NGO called IUCN, and they're exploring how to sort of protect the ecosystem and biodiversity around their projects. So these are very, very sort of effective ways mining sector can contribute.
I'm wondering if you can talk or give some ideas about, this is great for, I think, the major end of
Yeah,
the industry, but looking at the juniors in terms of what would work given more financial constraints and all of
absolutely.
that.
Look, I think that's a good question. Mining juniors are capital restrained. Every dollar is extremely valuable for them. It has to go into the ground. But I think now we've reached a stage where they can also look at electrifying their equipment, exploration equipment. You've got battery packs that can be, that are mobile and are cost effective. So that's one way of doing it, using renewable power to the extent possible. And of course, I'm assuming that a lot of junior companies are not exploring for fossil fuels. So looking at green metals is another way that the junior sector can indeed contribute to this. And it's a shame that we couldn't see the video, but over there, what it talks about is how you can actually work around the communities that you're with. And rather than simply setting up schools and hospitals, junior companies are very adept, they're very skillful, and that's why they exist, right? And why they're able to discover some big projects. I think they can think laterally on how they can also contribute to the surrounding ecosystem in preserving the ecosystem and helping the communities.
Do you want to share any examples of, kind of interesting investments or moves towards kind of a, you know, these climate investments that you've seen?
I think this is a good example of what Rio Tinto is doing, what Anglo American is doing on our own. We've launched a couple of large carbon funds which are investing in forestry areas in LATAM, Africa, Southeast Asia. These will be projects which are in and around mining areas. We are talking to mining companies, Amy, about how we can help them minimize their carbon footprint and help the societies around it. And a good way to do it is by introducing, you know, efficient land management ways in which to preserve the land around the areas, bringing cooking stoves in so that the communities are not cutting wood for their energy needs. Cooking stoves is a very efficient way. It also means that it frees up labor to focus on work and education. So these are some small ways of doing it. If I go back to this slide, this was a project we did in Ecuador and Peru, and it was done in partnership with an organization called Panthera. Panthera has on its board three well-known and successful North American mining promoters. You've got Tom Kaplan from Nova Gold, you've got Bob Quatermain from Pretium Resources, and Ross Beatty from the Lundin Group. So all very well-known, mining promoters, and it was a very successful project which helped preserve a very rare type of monkey. It introduced quinona and honey production, and it created, of course, multiple jobs and employment.
So, I mean, my last question for you is really kind of looking at, for other investors that are interested in kind of moving more towards sustainable investment, what sort of advice would you give to people kind of looking to refocus their investments in this way?
So I think obviously carbon funds is one area to look at. It's a market that has done quite well. It is a market also that has received a lot of public scrutiny recently about the integrity of carbon credits, but it's a very effective way of mobilizing money into the space. Carbon funds that we have launched, they generate about mid-teen IRRs, so 13 to 15%. So this is not private equity type return. One has to be clear about that. So you're not getting high teens or 20%, but 13 to 15% is not bad. And these are longer life funds, so they provide basically security and stability over a long period of time. So that's one way to look at it. The other one is, of course, for mining companies themselves, as I said, focusing on investing in and around the area they're looking at, Amy. So these are a couple of ideas.
Great, sounds great. Thank you for joining
Thanks,
me
Amy.
today.
Thank you.